FHA is a little bit more relaxed with, their credit score requirements than conventional. FHA, you can go down to a 550 if you're putting down 10%. You can go down to 580 if you're putting down the minimum of the 3.5%. Most of the time, conventional is capping you at least needing at least a 620. So
Mm-hmm.
FHA is a little bit more forgiving with for as bumps in the road with credit. And that's another reason why it is a product that's very popular,
Yes, it's very
because
popular.
it's a little bit more forgiving if you've had bumps in the road with credit, or finances. It's also a little bit more forgiving with debt to income ratio. You
Mm,
can have a higher debt to income ratio than you can with conventional and still, potentially get approved. Is more, as we talked about earlier, you can get a higher seller contribution. So if you're a
mm,
little bit skinny with money, this product allows you to be able to get more contribution. So I have sometimes people that do qualify for conventional, but they need more help from the seller, and conventional may be capping them, at let's say 3%, but then the FHA they can get 6%. Now a
mm.
bigger portion, if not all of their closing costs can be paid. So it's not a situation where it's always, you know, it's not even about one loan product being better than the other. It's a matter of matching the one up that makes the most sense for you. So if you
Right.
can qualify for FHA or conventional, let's compare them side by side.
Mhm.
Sometimes you may be able to not be approved for conventional, but be approved for FHA. So again, the reoccurring theme is we have to make sure that we're matching up the loan program that fits your particular financial situation.
Okay. And this is kind of a question that goes right into this, but why can you tell our viewers why sellers accept conventional over FHA at times?
Yeah, well, a lot of times, I mean, again, it's tough to say the motivation with the sellers, but
Mhm.
sometimes the perception is out there where if it's conventional, it's a stronger buyer, or if it's a conventional loan, is the appraisal maybe isn't as strict, and there's just some different industry myths out there that can say, hey, this loan product is better than this loan product, but you have to be very careful with that, just because when you're going in and you're looking at the ability for a client to purchase a loan, or excuse me, purchase a home, and then making a decision on who's better or worse based off the type of financing they're using. That's something that's sometimes that's a practice that's very unfair, in the
Right.
real estate market. So I can tell you it's all about that strong pre-approval, because if you have a FHA person that's pre-approval is strong, and you have a conventional person and their pre-approval was loose, well, that person with the strong pre-approval, even though it's a different product, may have a higher likelihood of getting approved. So again, that's one of the things that we want to make sure that we're battling. Go
Hmm.
in and make sure that, again, that everything is reviewed with your financials and everything is tight and your pre-approval is strong, so when you're competing with folks with the other loan types, you can compete with them, because at the end of the day, for the seller, it doesn't matter what loan product they get to, they getting the same green money at closing.
Right.
So
Right.
you want to be able to say, regardless of my loan type, I'm properly pre-approved and ready to go. So we're going to be able to get the closing so I can get my house and the seller can get their money.
Right. So sellers, you hear what Willie's saying. We don't want to be focused necessarily if it says FHA or conventional. We want to be concerned about who's the strongest buyer.
That's right.
Okay.
That's right.
Really.
That's right.
Because so many times as an agent, I get FHAs and conventionals, but sellers will pick, it depends on the market as well. And I'm gonna tell you this, the past 2 years, if whether you had conventional or FHA, they were picking cash over over
Yeah,
both
yeah,
of
yeah.
those.
That's right. That's
So it
right.
didn't matter which of those two you
That's
had.
right. That's right.
But yeah, sellers sometimes they hear different myths, and I'm glad that you are attacking these myths, such as the mortgage interest and different things that are hot topics, I would say.
That's right.
You
That's
know,
right.
things that people hear, but we want a experienced professional to say what it really is, not just
Absolutely.
going by what you word on the street.
And
Okay?
and sometimes, my team isn't opposed to. We'll pick up the phone and call the seller. You submit that
Mhm.
offer and offer letter and say, "Hey, listen, my clients approve of this type of financing. This is why they're strong, buyers. We've already reviewed income, employment, assets, credit. We've already, ran them through a preliminary underwrite. We've already done all of those things so the seller can be comfortable that if they accept your contract or accept your offer, that you're going to be able to close on that loan in a timely manner."